The Indian equity indices hit fresh record highs. At the closing yesterday, the Sensex was at 69,600 points, while Nifty closed at 20,937 points. While a surge in investments by retail traders and foreign inflows have put India's economy on the $4 trillion valuation mark, at the same time, India's GDP has also demonstrated a remarkable growth of 7.6% in the second quarter of this financial year. There is no doubt that India has emerged as an outstanding performer amongst major economies, showcasing resilience in the face of a globally uncertain environment. Whether it be auto sales, cement production, electricity generation or coal production, the Indian economy is setting new benchmarks for itself and the rest of the world. Well, this comes as the International Monetary Fund also described India as a global bright spot. These achievements have also been highlighted by Prime Minister Narendra Modi, who hailed the boom of Bharat's economy. Before commencing the discussion with our guests, let's in fact listen in to what the PM said.
साथियों, आज भारत की अर्थव्यवस्था का हर पहिया पूरी गति से घूम रहा है। कुछ लोग कह रहे थे कि विश्व में मंदी का असर भारत पर पड़ेगा, लेकिन भारत ने हर आकलन से कहीं बेहतर प्रदर्शन किया। आज भारत दुनिया की सबसे तेजी से विकसित होती आर्थिक ताकत है। आज भारत का आत्मविश्वास, भारत के लोगों का आत्मविश्वास अभूतपूर्व स्तर पर है। आज भारत में, आज देश में रिकॉर्ड जीएसटी कलेक्शन हो रहा है, कृषि उत्पादन के नए रिकॉर्ड बन रहे हैं, भारत के शेयर मार्केट पर भरोसा चरम पर है। आज भारत के निर्यात के नए रिकॉर्ड बन रहे हैं, यूपीआई ट्रांजैक्शन के नए रिकॉर्ड बन रहे हैं, त्योहारों में खरीद के नए रिकॉर्ड बन रहे हैं, गाड़ियों की सेल के नए रिकॉर्ड बन रहे हैं। आज भारत में सीमेंट प्रोडक्शन बढ़ रहा है, कोयला प्रोडक्शन बढ़ा है, आज भारत में स्टील उत्पादन बढ़ा है, बिजली उत्पादन बढ़ा है। दुनिया भर की कंपनियां भारत में मैन्युफैक्चरिंग के लिए आतुर है। हवाई यात्रा करने वालों की संख्या उच्चतम स्तर पर है। होम लोन में भी, उस सेक्टर में भी बहुत अधिक वृद्धि देखी जा रही है।
All right, to talk more about this, joining us on the show is Mr. B.K. Sabharwal, Chair, Capital Market Committee of the PHDCCI. Aman Agarwal, Director of Indian Institute of Finance, also joins us on the show. Mr. Ajay Dua, former Commerce Secretary, Government of India, joins us on the program too. Mithali Nikore, Senior Economist, also with us on the program. Last but not the least, Mr. Sriram Ramdas, VC Green Portfolio, is also joining us on the program. Thank you everyone for being a part of this interesting conversation. Mr. Dua, I'll begin with you, sir, if you can hear me.
I can.
Well, you know, it's all positives if you look at the Indian economy right now. Just a couple of years back, you know, this envelope or this atmosphere, this ecosystem of uncertainty had plagued the entire world. So what's really radical and impressive at this point in time, sir, is that just within a couple of years, India has managed to catch up and cope up with a lot of impediments, not only in supply chain, but the international mood when it comes to the world economy as well. What would you attribute, you know, these gains to? What would you attribute this success to?
I think it is a host of factors, Vineet, which seem to have come together to give us the rally which we've been witnessing for last 3 days. Today a little bit down, as we all know. But the fact of the matter is that apart from the political stability which was signaled by the election results in the 4 states or 5 states including Mizoram, there are a few fundamental changes also for the better which affected the stock market. Number one, I would say in India, it was the macro data on GDP which came out for the second quarter. That was important, And next one were the most of the corporate results for the 3 quarters have also shown positivity. Not really 3 quarters, 2 quarters, but declared in this quarter have shown positivity. There was always a fear, apprehension that the rural market will pull India down, both in GDP as well as the demand for goods, but that seems to have been only marginal. So, and we have seen fair amount of, as a result, the positive corporate results of most large as well as mid-cap companies, particularly the FMCG seems to have done rather well. A third point in favor of was we are measuring all these things comparatively and in GDP, etc. The base last year at this point of time, we've had an advantage of low base, so it's appeared large, but that might be when you go granular, but a 7.6% rate of growth is considered fairly good, even if there is a little bit of a base effect there. Globally, let me be quick. Globally, we benefited with 2 or 3 things. One, the Fed giving an indication that there may not be any more increases. The global employment data being also benign. But more important, I would say that we are seeing a possibility of the global growth being better than in the recent last 2 or 3 years, because one, there could be a thaw in the business relations between the US and China, particularly after the meeting in San Francisco, between the two leaders. I would also say yesterday's meeting in Europe, EU of President Xi has in fact gone very well, because the president of the EU actually talked of saying that we have something close to $2 billion of trade with China every day, and we look forward to increasing it far more. And we all know that China and the EU have kind of good trading relationships. Finally, I would say the prices of crude having come down, it affects markets like India, which are dependent upon imports. So, conjunction of all these factors, I think, is the one which has contributed to the stock markets firming up.
Mr. Sabharwal, if you can hear me, sir, are you there with us? Mr. B.K. Sabharwal?
Yes, I am able to hear you.
So your assessment of where India stands today and India's growth story, it is obviously being propelled by this engine of positivity, and it's being propelled by this engine of inputs that never really stopped except when COVID was around, but they have stalled for the rest of the world. How would you categorize this stimulating conversation that we're having right now?
According to me, whatever a stock market pundit should say, the Prime Minister in his initial speech, which you covered, had virtually said everything. And now, as Mr. Dua had very rightly said, that the long-term growth story of this country is intact. Inflation, if compared to the whole of the world, ours was the less. So, according to me, the best investment in days to come will be the capital market only. The clear reason is that even the fixed deposits or the mutual funds, we are not able to get even the coverage equivalent to the inflation. With political stability, which we are able to see in the near future now, I can only say that in 2018, these 3 states of North India the present government lost the election in all the three states, and now they have won it all the three states. So it is almost sure that there will be political stability in the country, and for that reason, this growth story will remain intact. Very rightly said by Duaji that two quarterly results have come. Indian companies have done phenomenally well, and in the third quarter, results also are expected to be excellent. With all these in background, I am of a firm believer that Indian capital market will be giving the highest rate of returns in days to come. We have outbeaten the world markets already, but now even the industries, many industries will be shifting even from China to India, so that even the employment opportunities here will increase. So the Reserve Bank RBI policy is on 8th, which is likely to have unchanged rate of interest. 3 days later than that, Fed will be coming out of the policy, and no interest is likely to even change there. And I am of the opinion that interest rate that peaked out in next 3 to 4 months, maybe after third quarter results, interest rate not only in India, worldwide will start softening, and that will be giving a good return in the capital market.
Mithali, if you can hear me.
Thanks, Vineet. I can hear you.
Well, the Prime
And
Minister,
thanks
in fact, alluded to a number of areas where India has done, shown stellar performance to the world. And this is obviously, reasons which have been extraneous to India as well. But what, according to you, have been some of these internal consistent measures that India has always focused on to make sure, that this push and this, propellant towards growth is always on track? Of course, buying oil from, countries like Russia also served, it saved a lot of money for us. It was a bold decision. It came at a risk. India took that. I'm just giving you that as an example why India is doing well. Do you think apart from this facet, there are other contributing factors that too helped India, boast about this economy that, we are witnessing today?
Thanks a lot, Vineet, for bringing me into the discussion. I want to just highlight one data point to start with for all our viewers and all the other panelists as well. When you go through the World Bank development indicators, they give you the data for all the 260, different economies in the world. And it's interesting to see that India is the only economy today which is in the top 10 by GDP. Of course, it's almost in the top 5, as we say. And it has one of the highest top 10 growth rates as well. Now, that's very interesting, because we're talking about high growth rates. I mean, there are other economies with higher growth rates, like Vietnam or Indonesia, which have very high growth rates, sitting at 9 or 10%. India's at 7%. But it is the only top 10 by size economy, by GDP economy, which is, showing this kind of growth. And what I also want to point out is it's not only the GDP growth, but it's also the growth of the GDP per capita, which I find very interesting. It's the first time in the last 5 to 6 years that I've been tracking the data that we've hit a 6% increase in per capita GDP growth. Now, that's very significant because it shows you that the dispersion of the growth is also now starting to happen. Right? Because we are grappling with inequality as a country. And when we see the per capita income growth start to happen, we can see that it's percolating down to, few of the income categories, not all, of course, but still it's starting to happen. I think this is a very, very important economic fundamental, which the equity markets have caught on to. Because they can see that, combined with political stability, combined with geopolitical stability in the region, right, which we have managed to achieve with diplomacy, and also with, a very healthy buying, purchasing power of the Indian consumer, positions India to be, unparalleled in the world market today when it comes to being an equity, sort of source where FIIs want to park their money, and FDI flows are also going to increase. Having said that, what are some of these factors which have driven? Of course, oil prices are one, but the second is also debt management. The fiscal rules that we have set in place, the fact that that's a law, the fiscal, deficit and debt management act, these laws help in maintaining a discipline in terms of government spending and ensuring that we are not borrowing beyond certain limits, and that makes our development, definitely more focused and fiscally prudent. And that also makes markets, feel safe that yes, India is not defaulting on some sort of debt because we have been fiscally prudent. And what I would say is that number three, which has really helped in our post COVID recovery, is a very pragmatic COVID recovery package. We could have been taken by that entire, episode of COVID and said, okay, let's spend a lot of, financing right now. Let's spend a lot right now because people are in distress. But because our COVID package was targeted to the lowest and poorest of the poor, with loan based support to the industry as opposed to grant based support to the industry, it helped the industry in tide over that period, innovate, also export during COVID, and that I think has fueled this post COVID recovery. And if you see, the last data point I want to mention is that exports currently form 22% of our GDP. And that's the highest number that we've had in the last 5 years. This is a very important example of export led growth, which we are now starting to experience. And we have to maintain this momentum, looking at high quality exports in from the software industry, from the high tech industries, and looking at how we can build on that front. So I'll stop there. Thanks, Vineet.
All right. Aman Agarwal. Aman Agarwal.
Thank you, Vineet, for that opportunity. The points which have already been mentioned, I'd not like to brush on them, but the other additional important points which are visible now, apart from stability in the government, is the projection in the activities which government does. When we look at international agencies or international companies, they look at the platform or the pathway which is projected going forward. And when there are too frequent changes, those pathways get disturbed in terms of investments they make. If we really look at the foreign direct investment which is coming into the country, the kind of job creation which is happening, even the government of India in the last 1 year or so has opened up its kitty of government jobs, which was actually slashed down extensively in the last 5-6 years. And almost all departments had vacancies going from 50 to 70% of vacancies under the slim government and effective governance program which they had introduced. But given the fact that they have introduced and opened up these jobs, this is also helping us expand the consumption activity amongst the people in this country. Apart from that, as I said, the foreign direct investment which is going up. Also, in my opinion, the news which came out about Adani has also had a positive impact, because you had a major regulator in the US who had also given a view on how do they see Adani stock, because that had been a big bump, being one of the largest group industries having invested in infrastructure based projects, not only in India but even overseas. And that is critical when we saw a large number of investment banks and financial institutions investing in some of these port projects, and then negating the reports which were giving a negative outlay to the corporate India image, as a matter of fact. So I think there are these combination of these events, apart from the stability of the government's projections, which are actually helping India. We're also seeing that there are a large number of wars and recessionary phases happening in the United States area, in Europe, primarily because of excessive senior money spent during Corona, and almost about 3 years, 2020, 21, 22, were the 3 years in which most of these countries did excessive fiscal spending. India, from that perspective, initially did not do that kind of fiscal spending, so became a non-popular government at that time. But then it did, change nature in the sense that the allocated funds for one division which are not getting used were actually utilized. So they did do spending, but not to that great extent, and not that kind of fiscal spending of seigniorage money which could be produced. And as a result, we are much more stable, having a controlled inflation for the RBI and a controlled structure, so that this is, I think, also helping in India's growth story perspective, which is visible around the world, and they see India as a growth factor so that they can grow their own money and take that money back to their countries where they are not finding that growth opportunity happening.
All right. Let me also take a response from Sriram Ramdas. Mr. Sriram? Mr. Sriram? Are you there with us?
Heavini, thank you for having me.
Yeah, well, the important point that has come out is that, a lot of times these opportunities did present to other nations as well. But it was India, in fact, I reckon, that, was the most ambitious to jump on them and, and have a plethora of, initiatives to make sure that business is driven to us rather than the next competition.
No, absolutely. Look, India is not the fastest growing economy. That's not a debate. Even the previous participant said that. But it is the fastest growing, largest economy, the top 10. So if you see there are countries, Mozambique, there is Republic of Congo that's growing at a much faster rate than Indonesia or even some Asian countries, growing at a very fast rate. But it's about disciplined growth. How do you grow at 8%, 10% while keeping inflation under control? At the same time, if you're trying to keep inflation under control, you have a problem in your government balance sheet where your fiscal deficit goes through the roof. And the government has been very disciplined, exceptionally disciplined when it comes to that. And I think that's what will differentiate our country from the previous mishappenings that the other countries had faced. If you see, people don't speak about it, but like an Argentinian economy, in fact, its GDP doubled from 2020. It just increased by 50%, 75% during these last 3 years. But it's because of the discipline that they're not in the global map for investors. Now, from the capital markets standpoint, I want to bring some points here, is that India is growing, and these numbers, percentages, it's important, especially when it's relative. And compared to other countries, you look at the US, 3.5%, Europe already into recession, maybe 0.3, 0.5% top growth. UK, they're fighting tooth and nail to just show some growth in the numbers, and government is pouring money into the economy. Still no hope. China, they're trying to revive the economy, revive the real estate sector, because 33%, 35% of the economy runs on real estate. So where our government is focusing on areas that is growth oriented, where growth is going to come from, where employment would be there. So, and at the same time, like I said, while keeping the fiscal deficit at 5.7, 5.9%. So, and the Sensex hitting all-time highs, going into the major leagues. It's because corporates are doing very well. The companies that we speak to, especially in the small cap, the mid caps, we don't cover large. That's another chapter. But those companies are guiding very confidently 25%, 20% growth. That is unbelievable compared to European companies. The top European companies, even the companies that VCs, the venture capitalists are putting the funds into, they are guiding like 25% growth. So you compare, India is on a whole new level, and a lot of money is coming into the economy, into the system. Banking penetration, what is it? I think it was 50%, 45% back in 2015, is all the way up to 75, 78% as we speak. And that is not small, especially for a company that is economy that is developing. Then you look at China. I mean, no one wants to do business with China. It is as fair and simple as it is, because you got the US export control regulations that deters doing business with China. So who's the next substitute? You've got Bangladesh for like textiles, and you've got Indonesia, you've got Taiwan. But India is on the map, and a lot of business that was going to China earlier is coming to us, and that is directly coming from the management of companies that we speak to on a quarterly basis. And the Q2 results again was wonderful from these companies. So, and lastly, I want to tell an interesting point. Indians are investing in the market. Yes, equity penetration is very low at around 5%. But we are seeing, as a fund house, we're seeing more demand to invest in India from outside. The foreign capital wants to be in India. more than Indian investors want to be in India at the moment. 3 years ago, 2 years ago, it wasn't the case. Indian investors wanted to be here, but it's not just that. Now it is the foreigners that are equally excited about India. Thank you.
Well, that's a great point you make, and that's exactly why India has been able to, in fact, tide away from the storm at many places where some of the other bigger nations have not been successful at. Would like to thank all my guests for being a part of this conversation.
For more such videos, subscribe to the NewsX YouTube channel, hit the bell icon.